So good afternoon to you folks. This is Dr. ICTFX. I'm going to take you through how I was able to take a trade on EURUSD, emphasizing my concept of the breaker block. Today we are going to discuss about the breaker block. So first of all, I normally start from the monthly time frame to take my analysis. The first thing to do is to find the monthly dealing range. This is our monthly dealing range row. I normally label it with a blue line. So today we are going to our breaker. The concept of breaker block is going to wind around the EURUSD. So remember, I've been always emphasizing to analyze the indices, the EUROX index and the United States dollar index. So what I'm doing, I'm analyzing the US dollar index here. So when you analyze the indices, it normally gives you a boost up on how to take trades with cautious, because you always know the market direction. So this is our monthly dealing range. Then I go to the weekly. So the weekly, when you go back to the monthly, our overall bias is what? Bearish. So I've been trying to analyze this weekly very well. So we're able to sweep liquidity of this down close candle, this one, which was of the month of August. So we're able to sweep liquidity above it. After sweeping your liquidity above this monthly candle of the August, then we changed to the downward momentum. So I think our next growing liquidity will be this low here, this one, this close of this monthly candle here. So what I want to emphasize, the higher the time frame, the more the PDRAs will hold the price. So this is our dealing range, and this is our next growing liquidity from here, or this candle. So that means we are overall what? Bearish. So we have to look for PDRAs within the premium towards the equilibrium level to push price down. So to go to the weekly, so when we put my fib tool to show me where exactly. So wow. So I'll teach a concept of price returning back to these levels here of 0.75. I think in my next video. So but for now we can leave it. My concept today, we are going to discuss the breaker block. So remember what we are trying to emphasize today, that price, we are looking for liquidity down here, this blue line here. We want to sweep liquidity there. So and you're seeing this price, it is moving aggressively towards this level. So what caused this down movement? Remember, from our monthly analysis, we have seen that we are heading downward. So and I've told you we have to look for PDRAs within the premium zone and the equilibrium price level zone to push price downward. Maybe to emphasize more, where do we find the premium and the discount zones? When you put your fib tool, the 50% retracement of price, this is the equilibrium level within this range. This is the up of the range, the low of the range. So the equilibrium price always comes at 0.05. So above 0.05 is our premium zone, below the 0.05 is our discounting zone. So what SMC traders call the premium, they call it the demand zone, the supply zone, and the discount zone, they call it the demand zone. So what we have to know, that when to trade, you have to be knowing the market direction. That's the overall thing that a trader must know. So from my monthly analysis, my analogy was we are overall bearish. So for me as a trader, an ICT or an SMC trader, what I normally look for within the premium, we all have what we call the PDRAs. These PDRAs will always help me to force price downwards. So these PDRAs, today my emphasis will be the breaker block. So let me show you what the breaker block normally looks like as I'm coming back to that price. So let me go up and enable it here. So normally this is for the beginners. So this trend here is a bullish trend, making higher highs, higher lows, higher highs, higher lows, higher highs. So normally maybe in this concept here, normally when price breaks above this swing high, there is breaking market structure, not change, breaking market structure. So this breaking market structure normally emphasizes that we are overall bullish. So that's why you saw here price retracing and going upwards. So when you come to this price level here, you're seeing that our price an horizontal line. So when price comes and meets this swing low, remember our swing low normally have what we call the order blocks. So this order block within this swing low is supposed to hold price for the continued upward movement. But due to the failure of this order block to support price for overall bullish momentum, so this price was able to weak through this order block. So after weakening through, like moving through this order blocks now becomes the breaker. So normally when price breaks through this order block, we have what we call, or when it breaks through this swing low, because normally it's not an order block. When it breaks through this swing low, we have what we call a change in market structure. So that's why you're seeing price coming, retracing to this breaker block. So after retracing to this order block, now we have a new market movement or new market direction, which is overall bearish. So price came, so when it returns here, the next drawn liquidity will be this lower low. So that's why price was able to tap into the breaker block what we call it was able to break market structure for the continued downward movement, came back, tapped into this mitigation block. Now this one becomes a mitigation block. So what I wanted to emphasize today, within this price level, from up here down here, price normally follows this criteria. If price doesn't come back to the mitigation block, it will always come to the breaker block. If it doesn't come back to the breaker block, it will come to the fair value gap. If it doesn't come to the fair value gap, it will come to the 2ML level. So what's the 2ML level? It is the Quasimodo level. So let me try to show you the 2ML. The 2ML is normally here. So if price doesn't come back to a mitigation block, this is our mitigation block, price will normally come back to this breaker. If it doesn't come back to this breaker, it will normally come back to a fair value gap within this price movement down. So let us assume our fair value gap is here. Price will come, tap into the fair value gap, continues down. If price doesn't move into the fair value gap, it will come to the 2ML level. What's the 2ML level? So the 2ML level is here. So price will normally come here, tap into that level, the 2ML level, then it will continue moving down. So if price doesn't tap into the 2ML level, it will come back, tap into the order block, the opening price of the order block. If it doesn't tap into the opening price of the order block or the mean threshold, it will normally come into the wick of the order block or the closing price, which is called the rejection block. So majorly that's what I wanted to maybe to try to emphasize. But let us continue with our trade. So we have been analyzing, and our major concentration today is the breaker. So dear folks, let us continue. So when you look at this price, we are able to make a higher high, higher low, higher high, higher low, higher high, higher low, higher high, and price was able to maybe, let me just show it here. So price came, made a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, this is the lower high. So maybe let me stop there. So these are the things I've been trying to emphasize up there. So guys, when you look at this price, it made a higher high, higher low, higher high, higher low, higher high, higher low. Now price came and was able to weak through, like it broke through this order block. Remember, every down close candle is an order block. So what we have to anticipate that price has to come back, tap into this early order block. So this failing order block is what we call a breakup call. So what we normally do, we come and we mark this breakup block, which is a fairly order block. So we come, we label the opening price of the breakup block. So since this is the weekly time frame, I normally use the red labelings and type the opening price of the breaker block. Normally label it BBR. So we also have the mean threshold of this breaker block. You're going to see some magic here, folks. Trading, have understand codes that are being able to fight through this journey. Though it's a difficult journey where most fail, but I thank God who has been motivating me to always do this thing. So this is what we call the mean threshold level of the breakup loop. So that's what I normally label there. So and I want to show you, folks, price was being held by this breaker in the weekly time frame. Remember, the higher the time frame, the more it will hold price. So I want to show you something, folks. Is this magic? So price came back, retraces upwards, tapped into this order block. Normally price is always sensitive to the opening price and the mean threshold. So and when you see, price didn't escape moving away from the mean threshold of this breakup block. So let us try to go to the daily and we see. So we go to the daily, folks. Sometimes I don't want to swell, but this thing, when this thing clicks, you will see why it clicked. So let us continue with our analysis. So folks, when you look at this thing, we have been overall, our mouse is disturbing. Let me try to. We have been overall bearish for almost 1, 2, 3, 4, 5 days. So let us continue. Maybe let me go to the 4 hour time frame. This is the thing I wanted. So higher time frames normally stop on the 4-hour. The rest becomes trading hours, entry hours, something like that. So maybe I'll teach about these glitches, right? So swing high, swing low. So our major emphasis is this low here, this low here. Emphasis is here. So why this low is within this one? So and this, because this low was able to break above, though the momentum was not much because of our high time frame PDR of the breaker. So we normally consider this one. So remember, I've emphasized the last down cross candle within a swing low, which failed to hold the price, becoming the breaker. And remember, to continue more, we have a fair value gap. A fair value gap, which is also one of our strongest PDRs, which I will come back and preach on this channel. So this is not magic, folks. Remember, all these levels of a fair value gaps are also sensitive. The low, the cost encroachment, the high of the fair value gap, price can't escape this baskets of PDRs. So and that's why we have been seeing this overall bearishness of the dollar index. So remember, guys, you have what we call the movement of price, and here we have what we call inverse correlation price movement. If the dollar is moving downward, that means the euro USD will be moving what? Upwards. So let me look for the euro XC index. So let me try to get it here. It's here, and I show you. Wow. So sorry for that. The euro index, I think it has only one broker, so we are going to operate using